Good evening, everyone. Good evening. Welcome to this evening's presentation. My name is Adam from Trade with Precision, and welcome to ATF X's webinar. We're going to be discussing how to find trades and scan like a pro. And as luck would happen, I just prepared myself a hot cup of coffee, which was so hot I managed to burn my tongue in the split seconds before starting the webinar. So anyway, that's just how it's going to be today. So my name is Adam again, and let's kick off. So first of all, I do need to give you an opportunity to view both of these disclaimers, give you a moment there, and while you are reading those, I will tell you a little bit about myself. I am based in London. I am a fund trader for regulated funds, and I'm also a swing trader and trend trader. So what does that mean? It means that I trade only trending markets. I tend to enter on the daily and occasionally the 4-hourly time frame. So we're going to be spending a lot of time tonight discussing trading habits and techniques as well. And some of the opinions I express will be that of my own and not necessarily that of ATF X or TWPs. And you may want to take notes as we go through. This presentation, this webinar is most ideally suited for both beginners and intermediate traders, ultimately those traders looking to achieve consistency in their trading. First thing I want to do is a sound check, of course. Make sure that you can hear me. Fantastic. Thank you very much, Christopher. Thank you very much. Good to know that you can hear me. I can see that a few individuals are still logging in and joining in the webinar. So I'm located in the UK at the moment. We are not having a summer. Hopefully wherever you are, there is better weather than there is where I am today. So on the agenda for this evening, we're going to talk about know what you're looking for first, trends and levels. I'm going to take you through the actual process that we use for identifying opportunities and scanning. And I'll give you a couple of tips and tricks that are mine in particular, which will hopefully make the process faster and sort of relatively speaking safer. All right, we are discussing trading here. We are looking for trading setups in terms of probabilities. We're going to be doing, we can potentially do both a top-down and a bottom-up approach, which I will explain what that is as we go. We'll also talk about grouping and organizing in terms of creating a watch list. We need to include correlation in amongst this. So if you are brand new to trading or just curious, maybe know very little about it, you should be fine. I will make sure that I explain things, and please, I'm happy for this to be as interactive as possible. So please feel free to ask questions as we go. Right. And of course, at the end, we'll have to talk about prioritizing and risk management. So it's worthwhile saying up front that the general approach would be 1% maximum per trade, 1% risk of our account risk per trade. Personally, I usually do somewhere between 0.25% and 0.5% risk per trade, because I usually have so many open trades. I might have anywhere from 2 to 5 to 7 to 12 open trades at the same time, and I will divide up my risk amongst those orders so that my total net risk is probably closer towards the 5% mark at any one time. So we're also going to talk about sensible places to put our stop losses. So there's quite a bit to cover in this, because we're doing both the concept and procedures and techniques, but also doing a little bit of actual market analysis at the same time. So I'm going to come back to that list, and again, the topic is how to find trades and scan like a pro, and then we'll come back to the last few slides in the last couple of minutes of that. So let's just go across to the platform and make sure that you can see this as well. Just check that you can see this. There we go. All right. Now, okay, thank you very much. Thanks just for confirming that for me. I do appreciate it. So again, I'm keeping in mind that this level of discussion here is suitable for both, let's call it beginners and intermediates. But I have to give you a very, very quick overview just so that it makes sense. I've got a list of instruments that I can trade on the left-hand side, and I can add to or remove these by right-clicking and accessing the symbols list. And then I can run through and simply add the ones that I use. So what I have done is effectively gone through and added the first, these are usually the majors and the minors, and a couple of cross pairs, and that usually comes out to about approximately 27 or 28 different currency pairs that I'm going to have a look at. Then, of course, what I do is add in commodities. So I'll have in gold, silver, a couple of energies as well, UK oil and US oil, Brent and WTI, which is West Texas Instruments, and also a few indices. So there's a nice variety of different markets to have a look at different financial instruments to trade. And really the goal is to try and, the way that professional traders work is that we're not really concerned so much with why the markets are doing what they're doing. So I'd also like to dispel some rumors here. We are going to be technical traders. So all we are concerned with is which markets are moving and are they tradable. That is all we're concerned with, and whether they ultimately end up being a currency or a commodity or an index, for example, that's absolutely fine by us. There are slightly different characteristics. So, for example, currencies, you often have obviously currencies are made up of two different currency pairs pushing and pulling against each other. It's a bit of a tug of war. So ranging is relatively common between currency pairs. They can trend incredibly well, but also it makes sense when they do range quite a bit. Okay, so we're going to run through those and see where they go. A little bit more defensive in terms of taking profit on those. When we look at commodities, commodities can range. They can also trend for incredibly long periods of time. And I'll take you through the higher time frame, look at gold, at what its longer term trend is looking like in terms of actually through to 2020. The rest of 2019, 2020, it'll make sense when I show it to you. And as well as commodities, we can look at those on higher time frames as well. So we'll have a look at lower time frames down to, if we get something really good, right down to the 30-minute time frame. But otherwise, we'll be focusing on potentially 4-hour daily and weekly. Indices as well. The beauty, one of the things that I really love about indices as well is that generally speaking, over a 10-year period, they will trend more than they will range. Okay, 2018 was a particularly range-bound period, and so 2019 is looking relatively similar to that. But the years from 2010 all the way through till 2017 were strong trending to the upside. So a lot of good trending opportunities when the markets are very clear about what they're doing. But at some point, every market has to take a bit of a breather. Okay, it just can't trend forever. There's a lot of energy expended in a market, and at some point it becomes effectively overpriced. So that there's subtle differences between them, but the good news is that having a variety is much better for traders if our focus is purely on trending markets. That's really what we're the most interested in, is a market that is mostly trending. So that is it. So this is the list that I have on the side, and I can start to work my way through it. All right, so when we talk about being trend-based traders, all right, our goal as trend-based traders is to focus on markets that are clearly trending, okay, with very strong trends. And we'll come back to this as an index. On the left-hand side, of course, I've got access to any indicators that I might need. And I'm just going to start off with initially just with price action. I may also use moving averages. So the moving averages here are really good for helping me confirm, first of all, that the average of price, the momentum of price, is bullish or bearish. I really need to stay away from markets that aren't going anywhere. So that means that if I arrive on a chart and I could see that price is predominantly going sideways. So this is a great example of where there is no real clear trend, and where there's too much volatility or not enough movement, and there's no real money-making opportunities to be made. So if I arrive on the chart and price action is currently doing this, especially if I look at the last 10 to 25 candles, all right, if they are going pretty much sideways, there's a lot more risk in trading it. There's very little money-making opportunities, and trading on the lower time frames is going to be problematic because of the fact that there is no clear trend. Now, in addition to this, one of the things that I'm going to be doing as well is just just looking predominantly at the daily as a starting point. Okay, so what does that mean? It means that for the most part, the daily is a great indicator of the trend. Okay, at the moment I can see that this particular market we're looking at is looking nice and bearish. It's quite a bit of a trend. It's been consolidating for a while. It looks very much as though it wants to head lower. If I switch up to the weekly, I can see that it's also in a downtrend there. So when we talk about it being a bottom-up approach, let's go to the 4-hourly. I can actually see, if I currently look at it, I've got the 50, 20, and 10. These are simple moving averages. Trading is not about complexity at all. Whenever I see somebody who is provides content out there for one of the millions of different websites and newspapers out there, and they're showing me a chart and it's got a lot of stuff on it, I can usually tell that they are not a professional trader. They're usually talking the talk, but not walking the walk. Professional traders will have clear, clean, simple charts with either just price action and horizontal levels, or potentially just a few minimal indicators required. Okay, they will keep it very, very simple. So because they just don't require much more than that. So we're using the 50, 20, and 10 simple moving averages. I could see here that my 4-hourly chart is in a downtrend. Let's have a look at the 1 hour. Okay, so the 1 hour is also in a good downtrend, all right, heading lower. So we've got the 1 hour, then the 4 hours in a downtrend. The daily is heading lower as well in a bit of a downtrend. We've got the weekly in a downtrend. So this is great because we have that support from the higher time frame. And when in the agenda, when we spoke about top down and bottom up, the concept there refers to, if I'm looking at the weekly now and I'm going to do a top down analysis, it means that if this is the top, I would go down to the daily, see what the trend is there, then go down to the 4-hourly. And basically what I'm looking for is to find a better entry into the downtrend on one of the lower time frames. So I start by identifying the trend in the higher time frame and then go down to the lower time frames to find a better entry into that trend. Okay, so the whole idea is if I can get a really good entry with a relatively tight entry and stop loss, then I can achieve greater relative profits. Okay, so in other words, I can find myself maybe with it, if I have a tighter stop loss, then I can actually achieve a 3-to-1 or a 4-to-1 out of the same move on the higher time frame. So that's a top-down approach. A bottom-up approach means that if I happen to prefer to trade the 1 hour time frame, I would be working through the list of instruments and then finding that as I check the higher time frames, they are conforming. So in other words, the higher time frame should ideally always be going in the same direction. Statistically speaking, if we have a contradiction between the time frame we want to trade on the lower time frames and the higher time frame, statistically speaking, we make less money, fewer profitable trades. If the weekly and daily are going in the same direction and we trade the 1 hourly, statistically speaking, we have more winning trades if we trade in the same direction, because what we're actually doing is trading in line with the prevailing trend. Okay, so that's something that we want to keep in mind. So a top-down approach is starting at the higher time frame and traveling down the lower time frames, looking for a lower time frame entry. A bottom-up approach is looking at a time frame, perhaps on the lower time frames that we want to trade, and then checking up the chain to see if the higher time frames are going in the same direction. And the more higher time frames are going in the same direction, the better in terms of effectively having the wind at our backs. So I'm reading your questions as we go. So the first question is, how important is it to recognize when a pair is close to the historic low point as the pair we are looking at Aussie yen, for example? Okay, so I always remember, and I can't believe I'm actually forgetting her name right now, but she's one of the most well-known female traders, and one of her quotes is that one thing we always need to understand is that the market can always go lower and it can always go higher. And I just had a blank on her name. I can go find it, I suppose, in the background. But and the point being is, if we have a look at this, for example, we have these historic levels. These are key levels. We need to discuss that as well, support resistance levels. You can see that we are certainly approaching a strong historic level of support, and you can see that there are reactions against this. Interestingly enough, price behaves differently when it is actually intending to break through a level, right? So looking at it now, although it had a very strong reaction, we had a little bit of a kind of a flash crash in January. We could see that the market reacted against that, and yet we could see the market is coming back down to that level. Okay, so at this point in time, this is clearly a strong level of support. Are we guaranteed the price won't ultimately break through it? Not necessarily. At this point, price is looking more likely that it wants to test that level again and ultimately probably break through that level and head lower. So, and actually we do a couple of strategies, trend-based strategies. One is actually a flat level breakout, and this is showing a tendency to want to break through that level. It could still be rejected and then come back again and come back again. So this is going to be something that I will almost certainly not be trading at the levels it's at now, but keeping an eye on it, because over time, if it does break through that, there will be some room down to the next key level. Okay, so we've got a bit of that. There's some room to go. And in fact, I can see there's actually another level over here. All right, so we've got those. Now, let me have a look at your question again. Okay, great. Thank you. Just let me know that I answered that. Okay, so what I want to do as a first exercise, because remember, if I just go back to the menu here, we're talking about know what we're looking for. First, we're looking for trends. So I've discussed now what top down and bottom up means, and it sounds really dirty, but it's not meant to be. I apologize for that. And we're going to talk about grouping and organizing. All right, we've also discussed a little bit of risk management, and what I want to do now is I'm going to focus on trends. This is, I want to say, the single most important element that we need to be able to identify. Okay, so a couple of things that I would really like to drive home by the top of the hour, by the end of this webinar, is that it really actually doesn't matter what we're trading. Forget about the fact that somebody says trade your $1 or trade the DAX. The reason for taking a trade should be that there is a lot of evidence to support the idea that that particular market we're looking at, whichever market that is much more likely to go in a particular direction than it is to go against it. Okay, and we're looking to trade in the same direction. We don't have to worry about this voodoo of what is Trump saying, what's happening with Brexit. What we do is we identify a market that is moving. We don't have to know why it's moving. What we need to do is to determine that the trend is healthy and that we can find a sensible entry into that trend and take profit. All right, that's it. Trading is a very simple approach. We're looking for something that's moving. We want to piggyback on it. So we're going to be trading in line with the big money, so to speak. And we're not, no one knows we're taking these trades. Nobody knows which market I'm going to be in 6 months. I will be trading in 6 months' time, whatever is moving. And so there's no video involved. It's all practical common sense. And it was just interesting highlighting this as an idea. So we do need to be aware of these key levels. So taking that into account, all right, I've just got different charts here. Gold is looking nice and bullish. We'll come back to that in a moment. And there's a lot I want to talk about on the different markets. So I've just got a couple of different layouts here. I'm going to start with a clean chart and talk a little bit about key levels. So create a new chart. I'm going to get rid of the grid. In essence, it also doesn't really matter. It's dealer's choice. That's the expression, whether we view OHLC bars, open, high, low, close bars, or if you view candlesticks. Now, candlesticks are easier to read in terms of body language. Okay, they've got a body and wicks on top and bottom, and we can just break them down very simply into bullish or bearish or indecisive. That we can keep it very, very simple. Ladies and gentlemen, write this down. Trading is not about complexity. All right, it's about simplicity. It's about doing the simple things very well. And we often overlook that because it doesn't sound right. In the same way that eating healthy, again, is also about doing simple things really well. Cut out sugars, cut out processed refined foods, eat lots of vegetables, there's a lot of common sense that we just seem to ignore for some reason. So what I'm going to do here is I'm going to start off with the daily. The daily should be my first point of any particular scan that I do. Now, instead of, so although I've had a lot of training in the first few years I was trading, at the end of the day, after I'd been doing it for about 3 years and I'd learned 50 different strategies, I actually then at that point discovered Nick McDonald. So this is now 2010, 2011. I had been referred to follow, excuse me, Nick McDonald's newsletter, and he's the founder of TWP. And he's the most natural trader I've ever met. Every other person on the planet has struggled at first to master trading. A big part of it comes down to proper education. In other words, not making sure that you teach people the things they must know, and then they can take or leave the rest. And that's kind of what we're going to be, I'm trying to throw in, excuse me, over the next, call it 41 minutes. So price action is the most important aspect that we need to understand, but it isn't just that. We need to be able to look at a chart and determine if there are trading opportunities in this. And Trade with Precision focus only on trending markets, because in their view, if the market's not trending, it's way too dangerous to consistently trade profitably, and I agree with that. So what I'm going to show you here is I want to run through a few charts and identify what would work or not work in terms of conditions. So if I just go like this, let's just have a look at this one, make that white, and I'm just going to remove these things because that's actually not meant to be the case. Delete the indicators. I want to keep it very, very simple. All I want is just the candlesticks for now. Okay, just going to keep the candlesticks. I'm using very traditional colors here. I'm not going fancy with this at all. So I'm using a daily chart. And what I'm really looking for is I'm going to be keeping an eye on the last, if I just go in and draw this in, probably keeping an eye on the last, let's call it 20 to 40 candles on every daily chart. So in other words, what I'm trying to do is, instead of overloading you with information, I'm going to show you the layers in which I look at things. Even if I have everything on the chart, there'll be certain things I'm looking at first, and it's easier for me to demonstrate it by starting with less on my chart and then adding to that. So let's go through and just remove this rectangle. I don't need that. It was just to highlight this is really where I'm going to be focusing my energy on. What I'm looking for, what I would like to see in the most recent 20 to 30 candles is this type of behavior, either a trend already in place, either going down or going up. Okay, and what I don't really want is a lack of trend, is something where price is going largely sideways. Okay, so I'm going to get rid of those. I beg your pardon. Let's go through and get rid of the objects list. Just get rid of the object. Sorry. Okay, so let's run through a few charts and have a look at what is happening on the daily. If the daily is not really trending, there's very few opportunities on the lower time frame. Okay, so what I first want to do is show you what doesn't work, what's not going anywhere. So we'll just go through all the indices as we speak, just because in the top, and you can see the speed at which I can kind of run through things. Okay, so here we go. Okay, that's refreshed. Okay, that's fine. That's not a problem. Let it all refresh. Okay, there's a bit more of a range here, but I want a really bad example to show you what to avoid. So what that does is it helps me reduce the list of items that I need to be trying to squeeze a trade out of. This is a very nice trend. Okay, again, doesn't matter what I'm looking at, but this is a very nice trend. Overall, you could see that it's clearly trending up, and it will do these extensions and retracements, but overall, very, very nice. Let's have a look at oil. Okay, oil is now trending a little bit lower. It has found some support, so I'll keep an eye on that one. What's happening with UK oil? They'll be kind of similar. So the similarities between the indices, we will call that correlation, and the similarities between the oils, okay, we call that correlation. So we might as well stop now and discuss the idea of correlation on the original menu we call grouping and organizing. Okay, and so here's what I'm looking for. I'm looking for markets that are correlated. In other words, what I mean by that is, if all the euro charts, euro Aussie, euro Kiwi, euro dollar, euro yen, are all trending up, that's an indication to me that the euro is strengthening across the board, and therefore there is less risk in buying or trading any of those charts, because clearly the euro is on a mission. It's strong. If it's strengthening against all the other trading currencies, then it makes more sense to trade it. It doesn't mean I will necessarily trade every chart. I will go through all the euro charts and look for the best setup or setups. If I see at the end of the day 3 equally good looking setups, I can basically divide my budget, my risk, if it's 1% per trade, between those 3 trades. So I can take all 3 of those setups. Okay, that'll be my approach. So in other words, correlated markets are actually a good thing, because they confirm that there is something moving, and it's definitely moving because it's moving across the board. Where I get worried is if I look at all the euro charts, to use that example again, and 1 euro pair euro dollars going down, euro yen's going up, euro Aussie's going sideways, that really tells me there's just not a lot going on, and it does make me more nervous of doing things. So what I look for is ultimately running through the pairs to spot where the correlations are, to see what is actually moving. And you can see both the oils have been trending together pretty closely. That's good. It's not a bad thing. Let's look at silver. Okay, so you can see silver is now updated. It is now in an uptrend, or close to being in an uptrend. It's gone from a high to a low, higher low. It was in a downtrend. That's good. What is gold looking like? Gold should be in an uptrend. There we go. And gold we need to have a look at on a much higher time frame. So we'll come back to that. Now, is everyone with me so far? Can I just do a temperature check? So far, are you with me in terms of the broad approach to certainly looking at the general approach as I've mentioned it? Okay. Don't be shy to talk, by the way. So now what I'm going to do is run through the currencies and have a look at it. And what I'm just trying to do right off the bat is find a chart that actually isn't going anywhere. Let's have a look. Is this refreshed? Okay, here's a great one. So this is a fantastic chart to demonstrate why the market, I can immediately scratch this off my list. Okay, there is absolutely nothing going on here. You can see the last 1, 2, 3, 4, 5, 6, 7 days, the market has gone nowhere. If I go down to the lower time frame, there's no clear direction here. So this was, I mean, I happen to have gone through about 10 different charts to have found this, but all I'm trying to say is that if I arrive upon a daily and I've got a series of candles that are just going largely sideways, then I don't need it. I can just immediately let go of this. Okay, so there's no money to be made on GBP today, because remember, I'm going to run through as a swing trader. I might only look at the charts once a day. Okay, so I can run through this, look at this, and immediately ignore it. Because the daily isn't going anywhere, there are no trades on the lower time frames at this point. I can come back to it again tomorrow, I can come back to it again in 2-3 days, but I can forget about it for now, and that's quite a good thing. And it doesn't matter really what my strategy is, it's really not worthwhile. If I'm going to try to trade the range here, so this is where a lot of beginner traders get stuck. They have 10 different strategies. They've got counter trend trading, range trading, and maybe trend-based strategies. And so they're looking at every chart on multiple time frames, trying to squeeze out a trade of it. And I was so happy to let go of that. I can basically just go, I'm looking for trends. If the daily is trending, I can trade on the lower time frames, or I can trade the daily. If the daily is not trending, there's nothing on any time frame. So it basically reduced the stress. It also means that I only ever trade in the direction of the trend. And ever since then, I consistently achieve my personal targets, which is 2 to 5% per month, or higher, just depending on which trades I take. But with none of the stress that I had before, because if I was counter trend trading and then something was off, or I'm trading a range, it's just stressful to trade things where there isn't a very clear momentum. So that's just more of a personal experience, personal opinion coming through there. So okay, good. Everybody's with me. Thank you. So the question here is saying, what if it was forming a triangle or a wedge? That's not necessarily a problem. I'm okay with that. For me personally, I'd be looking for the breakouts in the direction of the trend. But right now, this isn't really forming that per se, so I'm not too concerned about it. I still have time. I can actually check it tomorrow, and if it's broken out, then I can wait for a pullback, and then the trend will start, and I can start trading it. So if we go look at this on a lower time frame, all right, and then zoom out, you'll see well, again, you can see that largely it's not really going anywhere. Let's go back to that 4-hour time frame and just go in. Okay, so let's say, for example, it ultimately breaks down to the lower end, then I can wait for the breakout, let it get free of this range that it's not happy in, and wait for a pullback. But the real question is this the best trade setup I can find? And actually, if I can find 3 or 4 other charts today that look really good, then I don't need to be trying to squeeze something out of this. It's like trying to make something work that isn't really going to work for me. But yes, in terms of triangles and a few other patterns, in terms of them being bullish or bearish in trending markets, absolutely, I'm all for that. So there was something else that I was going to add to that. Okay, so I'm going to need to be aware of where key levels are. This is the next thing. So we start off with price action. Let me go and find a really nice trend. There was one that we saw, of course, with Aussie dollar. If we go and have a look at this on a 4-hour time frame, this is starting a really, really nice trend. There was a beautiful breakthrough of that level. And price is trending quite nicely now. It's come down to this level. Let's have a look at this. All I'm trying to do is find a really example of a really good trend. So this, again, I'm looking for really good stable trends that are already in place like this. This one has now come to an end. It's now starting to consolidate, but I'm going to go through and find a couple of daily charts that are looking like this. So let's see what is happening with Kiwi dollar. Not really happy. Euro Aussie. There we go. So Euro Aussie is trending relatively well. Again, I want to be aware of where these key levels are. So you can see it's approaching this level of resistance, but so far it looks as though it's quite keen on ultimately breaking through that level. And Euro CAD, okay, great example. Euro CAD, forget about it. Absolutely no reason to have this on my watch list for a while. I can maybe put an alert or keep track of it some other way, but this is going to just slice me no matter which way I get involved in it. So there's nothing on EuroCAD. I can see that there's no momentum, there's no market in control. Doesn't mean that it doesn't go through trending phases, it just isn't there right now. And so the first thing I want to do during my scanning process is reduce the number of charts that I should even be wasting time thinking about. Okay, because I'm going to be spending time thinking about things anyway. I just don't need to waste it on these types of things. So that's a great example of something that really doesn't offer those opportunities. Okay, and I want to be focusing on things that have a clearer trend. So I'm just going through a few of these. There's a good strong trend in play here on Euro GBP. So it's already in place when we talk about looking at the last 20 candles, clearly in an uptrend. And let's have a look at Euro Yen. This is looking pretty good as well. So it's a nice little weekly downtrend. You can see it's got a good trend there as well. Okay, and in fact, what is worthwhile to me is to notice, let's talk about support resistance levels here. Okay, so the second most important item on any given chart, the first one being being able to identify just by looking at the OHLC bars or candlesticks, noting that it's just moving down or moving up in the last 25 or so candles. We just need to find something that's currently trending. Okay, the next most important one after that is then being able to organize that chart into sections. So in other words, the way that the trading works is effectively the market reacts to price levels. Okay, it's basically made up of these price levels, and we want to trade it when the market is breaks through one level and heads down to the next level. Okay, or vice versa, breaks up through a level and heads up to that level. As traders, that's really where we're going to make our money, is when the movement happens from one price level to another. That's it effectively. So we want to take a strong trend so that direction is clear. We want to ideally get in potentially close to a level like this. So you can see here that we had price breakthrough, all right, a level of clear support, come back and potentially retest it. And it now looks as though it's potentially likely to head down to the next level. So where is that next level? I need to go and mark it. And actually, as it happens, it appears as though there's a couple of levels quite close to each other here. There's actually one just up here, which doesn't always happen, but in this case, we've got two close to each other. Let's see if there's anything else further back. And I would say that the next level that I want to keep an eye on is probably close to this in terms of proximity. So what I'm doing is focusing on the higher time frame, the weekly, for example. What are the key levels I need to be aware of? And certainly if the weekly is going to continue down, it appears as though there's a nice rejection candle there. If next week breaks the low of that, that level has been tested for resistance. And if it follows through and heads lower, the market is then, in terms of probabilities, if the trend is well healthy, is likely to continue down to the next level. And so that gives me some indication of the direction it's likely to go, and also tells me what my potential profit is on that trade. The beauty of that is that that will apply on most time frames. So I might go down to the daily, just make sure there isn't another level that I've missed. For example, there might be something else where I feel that I have missed these levels. So let's just zoom out. Just want to see there seems to be another bit of a level here, and let's put those in. So basically what I'm going to do is focus on the most important monthly, weekly, and daily support resistance levels. There's definitely something here. In particular, I'm very interested in levels that have been tested from both above and below. So if I just use this as an example, you can see there's a definite level of resistance there. There's also a definite level of support there. But I can also see that these levels have been tested here from underneath. Beg your pardon, let's just go back to those two. Has been tested underneath from here, as well as support from here. So we call this the best fit approach, all right? So we're trying to effectively put a line that connects the most levels, all right? So in other words, it's got to connect with as many candles and ideally is recent. Okay, so what I mean by that is I'm going to be focusing mostly on levels around current price action. I don't really need to obsess with levels that are up here. If I go and just get rid of some of these levels, I can get rid of the one down here unless we break down through that. I can get rid of that one as well if I want. So what I'm doing in a way is just keeping it focused onto key levels. Okay, key levels around that may be relevant also now means that if I'm of the belief that the weekly is going to head lower, I'll go down to the 4-hour time frame, for example, and I'm now starting to look for those trending opportunities. Okay, so that now I kind of have a sense of where the daily, weekly, and everything is looking to go. I will potentially keep an eye on these, but I really need to know where those daily, weekly, and monthly levels are. Those are the most significant ones. Okay. Okay, I'm back now. Let me have a look at your questions and let's just see how you're doing. Curveball here. So will you cover spread in the risk topic? I got burnt last week because the spread was 10 to 15 pips and I didn't pick it up. Yeah, we can talk about that. I don't see why not. That makes sense to me. And let's just have a look at this. Just checking things. Okay, so I think that's a fair point. So basically the spread is obviously our cost of trading when we have a look at it, and there'll be certain times of the day when we'll have an average spread across these particular items. The euro dollar could be anywhere from 0.5, so half a pip spread, up to 2 pip spread, for example, during certain times of the day. So what are the times of the day? First of all, if the instrument is a rare instrument, something relatively exotic, so let's go through to the symbols and just talk about that. If I take something, for example, the US dollar versus Hungarian foreign, that will these will be, or Mexican peso, these are more exotic, and so the spreads will be higher. But the most widely traded ones, the 28 key currencies, majors and minors, will sorry, I'm just watching my puppy seems to be hacking on something, which is a little bit of a concern. So the spreads on those will be a little bit wide. Now there'll be certain market incidents where the spreads will widen. 10 o'clock in the evening at UK time, all the brokers around the world will instantaneously close their all open trades and reopen them again. And the reason they do this is to capture the entire move of the daily candle. Okay, so they all agree it's all done electronically, but around that period, certainly let's call it 5 to 10 p.m. And going until about quarter past 10, 20 past 10, depending on the broker, those spreads will widen. They can widen quite a bit. Okay, and then they'll calm back down, but that's just a side effect of opening and closing all these candles. Okay, and then and so that's one, or during a big news announcement like non-farm payroll, or FOMC, or any kind of interest rate news announcement. That'll be the case. Okay, it's something we just want to be aware of. Okay, let's have a look at this one. Okay, so all right, good. Well, at least I answered the question, so thanks. Okay, and it can be the case we do want to be aware of this. So the next question is, which currency pairs, indices, commodities with great trading opportunities look out for in the next coming weeks and months? Okay, so we're going to try and go through those as well. So what I wanted to do is, let me just go through this and get rid of, I've got a lot of different things here. I want to get rid of that and that, and talk about these. So now that I've kind of generally looking to know what I'm looking to identify, I also need to get a sense of roughly where I'm looking to get into a trend, and then where I'm looking roughly to get out of that. So the template that I had on this would have been the moving averages. I'm just going to jump back to that, switch back to that template, and just make it this one here with the moving averages. Okay, so I've saved those. I'm just using a 50 simple moving average, a blue 20 moving average, and let's call it a black 10 moving average. And so if I go down to say the 4 hourly as well, and let's say, there we go, down to the 1 hourly, I do notice with really, really good trends, you can often get really good pullbacks into the 10 and 20 moving averages. So basically the 10 and 20 moving averages together as a zone become a relatively decent, especially when there's a good healthy trend, they can become a great place to get an entry into the trend. So I'm going down to the 5 minute here as well. There's a bit of a breakup, but you can see generally I'm looking for markets where price heads away from the moving averages and comes back. So these are great places for me, almost like a train station. So when the train kind of pulls back in, the moving averages are going to give me a starting point to look for an entry into a good healthy trend. Okay, so that's certainly what I'll be doing. Let's talk a little bit about reward to risk ratio. So an average decent strategy should be able to achieve on most of its trading setups, the higher quality setups, an average of about 3 to 1 reward to risk, meaning that for every dollar we put at risk, we'll make $3 potential profit on that trade. Okay, with currencies, when they're not really trending as well, or I'm a little bit more defensive, where they trend for shorter periods of time, I'm usually happy if I get 1.5 to 1 out of those markets. Okay, when it's trending incredibly well, that's fine, 3 to 1, and sometimes, of course, more. That can be the case depending on the entry. You can get this one here would have been about 2.5. No, that would have been about a 3 to 1. Okay, there's an entry over here. Now, some of the setups. So I'm looking basically for traditional types of setups that occur in the markets, and the way that I go about doing it is looking for this interaction, these extension and retracement back, sort of heading away and pulling back into the moving averages, looking to enter that. And usually I'll find a nice little bearish candle. If I just zoom in on this, nice little bearish candle like one of these ones, looking for my entry below the low of that, my stop loss above the high, and then looking to achieve at least 1.5 to 1 on a currency, if not 3 to 1. Almost certainly a 3 to 1 on commodities, and a 3 to 1 at least on indices, because they can trend really well. So I wanted to give you a sense of kind of my expectations on that. If how many trades am I looking at per week? 2 to 5 trades per week is relatively realistic across all the markets, ideally with a net profit of about 1% out of all those trades, and that will then compound to about 5% per month. So again, to recap, I'm looking only at trending markets. Only at trending markets, maximum risk of 1%. I'm looking ideally for anywhere from 2 to 5 trades per week. and I'm looking to take profit as I go. Obviously, I'm always going to be taking profit personally. I'll always be taking profit at 1-to-1, half my profit off the table. So what that does is that gets my trades to either break even, and if they come back, they're break even, worst case scenario, or they, and obviously in amongst that, I have trades that don't make it to 1-to-1, but out of every 10 trades, I might have 1 or 2 losing trades, 2 or 3 break-evens, and the rest will be profitable. But net, I'll be profitable. And that is trading in a nutshell, is not to get obsessed about any one particular trade, but look for the types of trades that I could take repeatedly that occur within the markets that will give me a probability of at least a 1.5-to-1. So I just wanted to give you a sense of something to look at. And what's interesting about what I'm showing you now is you can see that the trend on the 5-minute doesn't look that bad. There's also a bit of a trend on the 1 hour. There's a trend on the 4 hour, the daily. The weekly actually looks better than the daily. The daily is kind of pulled back in and now hitting low, but the weekly looks as though it's pretty much come back to this key support resistance level up here as well. It looks as though it's keen to head lower. And I can see if I look at the moving averages, I can see them all fanning out and heading a little bit lower. So the other questions are, for gold and oil trading, what time frames do you prefer? Well, I'm usually looking at the daily and 4 hourly. So I'm looking on that for most, but that's my lifestyle currently. When I have less on my plates in next year or later in the year, I'll head back down to looking at lower time frames as well. But right now I do about half an hour, or I just check the charts every 4 hours to see if there's a setup or not, but I have my watch list. And the question then, why simple moving averages and not exponential moving averages? That is because there isn't a reason. Sorry, it's dealer's choice. You can use whichever you prefer, simple moving averages or exponential moving averages, any one you prefer. Okay. So and so it's really dealer's choice. I'm using simple moving averages. I used to use exponential, but I use simple moving averages. In general, for me, I'm really focusing on price action, and the difference between them is very subtle. It's very simple. It's not enough that it's going to impact the results of my trading. So you can use any one you want. So let's just go back to this. Now what I want to do is I also want to, so I'm just going through the list. I've spoken about what I'm looking for: trends, key levels, moving averages. I've done top-down, bottom-up, grouping and organizing. I'm going to show you now in prioritization and risk management. So what I want to do then is I want to make sure, I want to first of all go through and have a look at all the euro pairs. So what I'm looking for here on the daily, for example, is I want to see if there is anything going on with the euro pairs in particular. So Euro Aussie is climbing. Okay, fine, that's trending up. Euro CAD is going nowhere. All right, so Euro Swissy is going down. Euro GBP is going up. So what does it tell me? So far, there doesn't seem to be much correlation between the euro pairs, okay, of those aspects. So I'm pretty much going to kind of slow down there and see if there's anything else I like. But you can see these are now heading up. Euro Kiwi, Euro Aussie look kind of similar, so there can be some similarities there. Then I'm going to have a look to the GBP pairs. So although this might sound like a tedious exercise, it really does, it gets relatively quick to do. I can see, first of all, I can see there's a bit of a level up here and another level down here, but overall this appears to be moving. Anything on GBP CAD? GBP CAD heading lower. Okay, Pound Swissy also heading lower. That's interesting. Pound Yen heading lower, so that is also in a downtrend. And also in a downtrend. And Pound Kiwi, let's have a look. Pound Kiwi is also sort of heading low. It's pulled back into the moving averages, bearish candle there. And not as it's had a strong trend recently, but what I see with all the GBP charts compared to all the Euro charts, all the GBP charts have one thing in common: they've all been trending lower. So that tells me that the GBP component is the common element, and that's been weaker. Let's have a look at the Aussie charts. Aussie charts looks okay. That looks as though that once they hit lower. Aussie CAD, Aussie Swissy also looking quite weak. Okay, Aussie Yen also heading lower. Aussie Kiwi also a little bit lower, but at least generally trending down, but not pretty. So if I had to choose between Aussie Kiwi and say Aussie Yen, I'll go with Aussie Yen. Okay, of the two. All right. If I'm concerned about that key level on Aussie Yen, let's have a look at Aussie Swissy. So the point is, I can see that generally the Australian dollar is weakening. Let's have a look at the Kiwi dollar. Kiwi dollar also, oh, okay, there we go, refresh, Kiwi Swissy. Okay, also consolidating at the moment, was trending beautifully. So it's about energy as well. You get this consolidation when the market goes nowhere, then it breaks free, moves, and then it consolidates as well. So I'm really interested in stuff that's still currently trending. This one looks as though it's very keen. And this is Kiwi yen. So I'm going to come back to that in a moment. Dollar CAD, we're almost through scanning most of them as well. Dollar CAD, dollar Swissy, that actually looks pretty good. So there's a nice little downtrend there, and we've pulled back. There's a nice little bearish candle there. It's a potential shorting opportunity, and I'm just keeping an eye on this level here. Support and resistance could turn out to be a bit of an issue. Let's look at dollar yen. Okay, so now I don't know if you've noticed this, but every time I look at a yen chart, it's heading lower. Let me just show you this. So this is dollar yen. Let me bring up euro yen. Okay, euro yen. Let's look at them on the weekly. They look a bit better on the weekly. Okay, that looks as though it's pretty much trending lower. Let's look at pound yen. Pound yen is also kind of producing a bit of a bearish candle, having moved lower. Let's look at Aussie yen. Okay, heading lower. Let's look at Kiwi yen. Heading lower, nice little bearish candle as well. So most of these are looking as though they want to head lower. Let's see if, and we've seen dollar yen. Let's see if CAD yen looks like that at all, potentially. Okay, CAD yen not so much, and Swiss yen, let's have a look. Swiss yen not so much, but there are a few of the JPY charts that seem to want to head low, and I've also got dollar Singapore. Okay, so for example, dollar Sing was trending up beautifully. It's come back down. Doesn't look that great here, so I can stay away from that. And so I've noticed the GBP charts, Aussie charts, and JPY charts all generally seem to be more bearish than bullish. And actually, there's none of the currency pairs as a group, at any rate, seem to have any strong uptrends at this point in time. Just notice that. Then I wanted to show you gold. So what I want to do here is show you gold on a much higher time frame and draw your attention to how we look for items that I know that gold in the longer term so far, it looks as though it's very much going to be breaking out on a much higher time frame. So let me show you this, draw your attention to it. Okay, if we kind of do this, I'm not too worried about the accuracy of that. This is kind of the key level. So what happens is we've had price kind of break down. It's been trying to get back up above this 1350 level for a long time, since 2013. And it's producing a series of higher lows, okay, going up into this wedge. And so it may break out at any point. So let's just put a date onto this. So let's say we're currently sitting in June 2019. But anywhere between there and potentially up here is liable to break out. And so that even goes so far as 2021. Anywhere in this period is capable of breaking out. It might even attempt to break through and fail. It's looking overall, it's looking nice and bullish. If for some reason between now and then it breaks this low, then that whole pattern is negated. But currently it is conforming and building up a breakout pattern. And I find this fascinating because when it breaks through, man, it is going to move. It's going to go straight up to 1560, pretty much 1560 on the nose. Without a doubt, it's going to head up, and it can do it very quickly. Here it did it in 1, 2, 3 months. And because it's building up since 2013, when it does eventually break, it's going to move pretty quickly. So what's going to be of interest to me is what causes that breakout, because technically, I said to you earlier, we don't need to know why, but I'm just interested. Will there be a war that breaks out? Will there be a terrorist act? Obviously, I'm hoping nobody gets hurt. Will there be some sort of financial crisis? It'll just be interesting that whatever causes it, there'll be some reason for it, and gold will then break out. But so far, it's building up to a very bullish pattern. I'm not looking to buy it now because it could sit there for another 2 years. I'm not concerned about that. When it breaks through, I can start. There'll be a couple of months where I can trade it. So, and that's fine. It's always going to be on the move. I've been trading it down here. If we go back down to that daily time frame, we were trading it, especially I was trading a lot of this. This is actually a better version of the trend. There was a much better trend previously. So this was very tradable, and that was looking good. So I prefer a nice healthy trend. This one is very aggressive, but overall really makes sense. And certainly any trades up to here, I'm taking profit ahead of this level because it's going to take a while to break through that level. Okay, and if it heads back down, that's fine. I might consider shorting it, but overall, because the much higher time frame is currently looking bullish, I'm much more interested in looking for price to be down the low and then starting to trend up. Then I'm looking for bullish opportunities there. So that's why golds can sit on my watch list, and basically in general I know when to kind of come and go on it. It's because of that much higher view. I can see how much time I've got it. So when it's lower down and starts to trend upwards, I'm happy to buy up until this level. And when it does break through this level, when ultimately that is, I'll start looking for buying opportunities. And if it goes down, because the much bigger time view is bullish, I'm much more conservative with trading opportunities. I will either not trade it, or I'll trade it, but very kind of with a much shorter time view. So maybe on the 1 hour down from one level to the next, because just the overall flow is kind of a little bit more. There's like 60% bulls and there's 40% bears. So, and you can see the downtrends are not as bullish as the uptrends. Okay. So it just gives me a much higher sense of view of where that market's going, and I wanted to show that to you. Now, what's interesting is if I then go and compare that to, say, silver, silver is actually looking more bearish than bullish. That's quite interesting to me. I think that if gold ultimately breaks out, we might see silver's level hold here, but it is looking as though it's actually producing lower highs. It looks the opposite, almost the inverse of gold. Over the same period of time, it looks as though it's producing lower highs going down to this level of support, and it's going to break through there, which is quite interesting. I would be surprised if in the next 10 years gold has gone up and silver's gone down. They've completely gone that way, because they're generally closely correlated. So what I would expect is if gold does ultimately break out, is to see silver find support here, basically at all-time lows, and then start heading up from there. So I'm more happy to trade gold right now than I am silver. And let's have a look at gold. At oil. Let's have a look at oils. Okay, so what's going on with oils? Well, oils were in a really nice uptrend. They've broken that uptrend. So when we break the previous highs, we break it. That's how we know a trend is finished. How do we know when we've broken out of a range? Well, we break free of the range. How do we know when a trend is finished? Well, if we break the previous lows. Okay, so an uptrend is made up of higher lows and higher highs. We broke it. That trend is extinct. So what is the trend now? Well, the problem is we don't really have a trend. We need 2 lower highs and 2 lower lows for a downtrend. We need 2 higher lows and higher highs for an uptrend. Right now, we don't have anything. So basically, by definition, this has no clear trend on the monthly. On the weekly, what's going on? Well, on the weekly, it's now gone from a high to a low to a lower high to a low low. So it's a downtrend on the weekly. If we go down to the daily, it's now in a downtrend on the daily. My favorite types of conditions are where the monthly, weekly, and daily, even if I'm trading the 1 hour time frame, the best ones for me are when the monthly, weekly, and daily at least agree with each other. Okay, so it just kind of explains why there's a bit of uncertainty there. So there was a comment today, yeah, I know in the news, the ship's blown up today. So if you get a chance, have a look at the news. There is some concerns about it, but also this market is also, potentially trading just supply and demand. So it might have caused a bit of a reaction to that. I'm not convinced yet that it will change the trends over the coming weeks or months yet. When I say that, I haven't seen anything that will indicate any reason to change that. So there might ultimately be a bit of a setup where price looks as though it wants to break through this level of support. In order to do that, I'd have to see price hitting lower, like I'd have to see lower highs, like kind of like a little ball bouncing where it's doing smaller and smaller bounces and then breaks through that level. That's a really nice sign of weakness. Currently, there's just not enough information to make a trade. And so that's the thing, is if the market isn't trending, then there isn't information to make a trade. Whereas if it is trending, then the information is actually there. It's self-evident. Because it's trending, I'm looking for a nice little bullish. Like this is a great example over here. This is a great example. If I just zoom in on that, it's a great example of the kind of setup I would look for. And typically that little ball, that little object, sorry, that little rectangle doesn't look that great. But this nice little bullish candle in an uptrend is great. That's also a nice little setup there in an uptrend. This is also a bullish candle in that uptrend. So there's a couple of different setups in that previous move to the upside. Coming down, indecision candle to the downside there. That one actually looked quite nice because it's a nice level of support tested as resistance. So not only do I have lower highs, lower lows, and I have my kind of price coming back into my moving averages, but it also happens to be a retest of support and resistance. So little things like that. I actually missed that trade setup, and that was on the daily, and that one was easily about a 5 or 6 or 7 to 1. Okay, and so remember that my goal is to just accumulate as many kind of ideally good trades. Now, so if I'm making, that's the thing, right? If I'm making 2 to 5 to 8% or something in a month, and I'm doing that just trading end of day, and I might only do that with about anywhere from 2 to 10 trades. What I could do is trade intraday. It might take me potentially a few more trades. It depends. So I've met a lot of traders. Some traders really prefer doing it end of day. They find it a lot less volatile because the trend can change on a 5-minute chart, can go up and down and sideways throughout the day. Generally, the daily itself is slightly more immune to low and medium impact news. So let's have a look at that menu one more time. Top down, grouping and organizing, prioritizing, and risk management. Okay, so for the time being as well, if I have a look at the indices, just noting those. So one of the charts that I had a look at, which is sitting over here, let's just see the Dow, and we've also got the S&P. So the reason I had this one up here is because these are just showing the highs over here. I don't need that one, so I'm just going to get rid of that level. And I certainly don't need that. That was just to illustrate a point. This really, I wanted to just highlight this. You'll see I've got an indicator on my, at the bottom. I've got that. I can get rid of that. And these ones. So really here, what's interesting, and we call this divergence, the RSI indicator or MACD or stochastics, different indicators, they basically measure the health of the trend. And we're not talking about oversold or overbought, not worried about that at all. What we're looking at here is that they measure basically, when we look at a normal chart, it is price over time. Okay, so this is the movement of price over time. When we look at these indicators, it's basically measuring speed over time. So if the market is actually slowing down, which means it might be losing its momentum, these moving averages will start to fall behind. And here's a great example of it. So I'm looking at the S&P 500 monthly, and I can see that although we created a fresh high here, this momentum indicator actually failed to do that. We then went on and created another high over here, and we went even lower on the RSI. So what this is implying is that in the coming, so call it 6 to 18 candles, which is 6 months to 18 months, the market is due for either a sideways consolidation to gather its energy like it did over here, or a correction. A correction meaning it'll head lower to basically make regather some of its strength. It's basically, in a way, price action is too expensive. Okay, so it does mean increased volatility over the coming sort of 6 to 18 months. So I'm a little bit more cautious on that. It also, we can see that there's definitely some strong resistance occurring at these levels. Okay, so my expectation is super cautious when it comes to trading these because of that exact thing. I'm very cautious if I'm looking at these on that time frame. And let me get rid of this object. Unfortunately, where's this one? Boom. Let's just remove that. There we go. So I'm just extra cautious. You get some good strong trends. There are definitely bulls in the market, but there are also bears, and they come in at those levels. So for example, the bears will all be sitting above a certain level and there are no buyers above it, and then the market will crash. So no matter how bullish it looks right now, a lot of these US markets are showing signs of topping out. It's very, very slow. We don't go into a bear market in a few days. It takes about 6 to 18 months to turn around and to head down, and it lasts a couple of years. But at the moment, it looks very much as though there's some definite exhaustion on the higher time frame. So I'm very cautious when it comes to these higher levels of support and resistance, these ones here as well, definitely. Whereas trading it up from the lows is similar to gold, trading it more to the upside, and if it starts to head lower, trading it down to these. If it breaks to this level again, it'll head down to the next key levels. Let me have a look at your questions, and then I need to go to the end. Now, great question. Do I trade the news? I don't. And let me explain my rationale behind not trading the news. Trading the news for me is more like gambling. I don't really know what the outcome of the news is going to be. Even if I knew what the actual numbers are going to be, I can't always tell what the market is going to do with it. So I don't actually know anyone who trades the news successfully. Because it's just so incredibly volatile. So usually what I'm looking for is a trend that is uninterrupted. The problem is actually it's the news that can disrupt a perfect trend. And so I usually avoid doing that. So I know that a lot of people say that they trade the news, but I've never actually met anyone who does it successfully. One quick one: overnight or over weekend trading, will I hold a trade? Certainly on the 4-hour and daily I will. On lower time frames than that, I will probably exit the trade over the weekend. Okay, I just will do that. So let's go back and let me wrap up these last few slides for you, and I'll check your questions as we go. So why choose Choose Atf X? They're regulated by the FCA. There's a license number. Efficient, secure, easy to use payment portal. They are committed to providing competitive prices for our clients. Global investors' most widely used trading platform, MT4, and bespoke customer service. So they're there and available for you. So should you have any questions, here's their address. I don't mean go to them, but I mean you can reach them, can call them, and they're great. They're good people. So if you have any questions at all, please feel free to do that. And if you did enjoy this webinar, I know we packed so much into just 1 hour, but maybe send them an email letting them know that, you know, you want more kind, because we can do a strategy program if there is a need for that. All right, so that's something I'm just saying. They don't always watch their webinars. They don't always know how well, if you guys are happy with it or not. Basically, that's the idea. So what I'm going to do, thank you very much. I see that we are bang on time. What I'm going to do is I'm going to end the webinar. I loved the questions. Thank you very much. You asked perfect questions. You asked the right questions. My usual entry method will be from the moving averages, usually looking for a single candle, so a nice bullish candle in an uptrend, bearish candle in a downtrend, small or medium sized, nothing big, and looking for, and I'll use the candle as my entry point. So my stop loss, my entry on the one end of the candle with my stop loss on the other end of it, and then look to take profit at 1 to 1, 2 to 1, and so on. Okay, yeah, there we go. Thank you very much. And I loved all the questions, so thank you very much. I hope you enjoyed it as much as I did. And I'm going to wish you, I guess we're close enough for the weekend for me to wish you a great weekend. It's Friday. Is it Friday or Thursday tomorrow? I don't even know what day it is. Anyway, close to the weekend. Have a great weekend and the rest of your week. So thank you.